Get started. As you can see on the screen, this is referring to the gold and silver flash crash on Friday. I have recommended this gentleman to you before. He's called Alistair McLeod. He's in his probably late 70s now. He is very good about the machinations of what happens under the hood as far as the gold and silver market goes. And he was explaining how what went on Friday all looked very suspicious. And this is a very good article. I'm not sure if I can share this article with you, but I suppose if I scroll down, let's see if we can share it or not. Oh, yeah, here we go. Right, I'm going to put this in the chat box. This is a very good article. It's very well written. The one thing I would say with Alistair, he's one of these that is permanently convinced, he's absolutely convinced that the dollar will not be the reserve currency of the world. And he thinks possibly in the next few months or weeks or hours, whereas I used to think maybe 20 or 30 years, but I certainly think it's possible by 2030 the dollar may not be the reserve currency of the world. Certainly by 2050, I don't think it will be. But he's explaining what went on basically, and also I've also shared with you another guy called David Jensen. To be honest, don't pay for his. He puts out a lot of content free if you just join his mailing list. And again, I can share this one. So let me put this in the chat box. And David's explaining again what happened on Friday. Basically, a lot of the growth in recent months has been driven from the east and from Shanghai. And after the Shanghai market closed, and I think it was midnight in Shanghai on Friday, all these fun and games started. And the other thing is that what went on is COMEX and the London bullion market is David's theory, and it makes perfect sense to me. I have been manipulating this market, gold and silver, for a very long time, as particularly the London bullion market. And what's been going on over the years is lots of people have taken, particularly banks, futures contracts, long and short, and never taken possession of the physical metal. Well, I have spoken to people recently. I think one was in America, certainly some in South Africa, and certainly some in England, have had to wait weeks for gold that they bought from online portals. And there is a significant shortage. And silver in particular last year, there was more silver used than was above ground. More silver used than was produced. So they were hitting the reserves, but the reserves are not significant, and the increase in demand is. And the increase in demand for electricity, for power, for solar panels, and all the things I've explained to you before. So anyway, I started buying gold and silver on Friday, much to some people's surprise. And this is where you've got to start thinking, you start sometimes you think as a trader, and sometimes you're thinking as a longer term investor. And for me, with gold and silver, gold more than silver in terms of this. Silver, I've made a lot of money the last few years, and hopefully you have too if following along with me, and more so on the miners than on silver for reasons, again, I've explained and you can find in Mentor Pro. But the thing is about all of this is that the US dollar, this is the dollar since 1913. Well, a dollar in 1913 is now $100 is now worth zero. More significantly, for those of us living in the current century, there is a bit of a chart somewhere. Basically, where's it gone? Based on cumulative inflation, and again, if this is the government inflation figures, then I'd treat it with a pinch of salt and things are much worse than they say. The US dollar has devalued by approximately 47% since 2000, meaning that a dollar in 2000 about the same purchasing power now. You need 188 for this. And I did share this with you in the crypto webinar presentation in 2020, the impact of inflation on depreciating the currency. So you now need almost twice as much dollars to buy things as you did 25 years ago. And then since 2000, though, the significance is that the dollar has devalued by approximately 94% against gold and 93.6% against silver. So if you're in this for the long haul, then gold and silver are a very good way of maintaining the value of your money. And this only goes back to 1970. But if you go back to pre-1933, remember in 1933, Roosevelt banned Americans, confiscated gold off Americans, and banned them from holding gold. And Americans, I believe, were banned from holding gold until 1971, when Nixon took them off the gold standard. So gold has been abused over the years. Central banks are buying in huge quantities. China has been buying in huge quantities. And according to Alistair McLeod, who's lived in China and knows the inside workings of China, he said they've got significantly more than they are claiming. And Poland has been acquiring gold in numbers, and a lot of central banks are buying gold. And Ireland bought gold, started buying gold a couple of years ago for the first time in 20 years. So they're all buying into gold. This is the purchasing power in a graph going back to 1970 of, again, the dollar versus gold. And the issue with gold is over a period, there are periods when it's not the best investment short term because you are seeing that. Where's it all gone? Had it all lined up. Here we go. No, that's not the one I wanted. Hang on. Here we go. So I've shown you this many times before. 2008, when we had the crash, the stock market came down 65% and the S&P took 5 years to recover. Gold came down 30%, recovered within a year, and then went on and almost doubled from the situation here and was up significantly here. Then you saw that gold went nowhere and it actually dropped. It dropped 50% in this period of time. So the gold buffs who say just hold gold forever, the long periods where when the stock market's on a run up, gold is going the other way. But the maths of all of this are it's worth having some investment in gold, and which is why I started buying again last week. And I have been buying actively yesterday and sharing with my investing group the levels at which I have been buying. And don't think that if you're in the Eurozone or in the pound that you're any better. I've shown you this before. So this is gold today, is rebounding on its way by the look of it, trying to hit 5,000. And then you have gold against the pound, same pattern. Gold against the euro, same pattern. And it's the same similar levels of depreciation. And I say, I can't find the plumbing thing now, but I had the thing up here somewhere showing me how much. Oh, here we go. The euro and the British pound have significantly depreciated when measured against precious metals. The euro has lost approximately 85% of its value against gold, and the British pound has suffered even worse, 87%. Now, silver, the thing with silver, you will know, those of you who've been following along with me, silver is not normally the best of the two. But in the last few years, because of the supply and demand issue, which is why I am still buying silver and didn't sell any of my miners and have bought more, is that this is not just speculative. Gold is the kind of thing traditionally where you put money into gold as protection against a crash, and you also put money into gold if you've already got plenty of money. And again, it's part of a hedge for your own personal portfolio. To make money out of gold, significant amount of money. I mean, it was up 73% last year, which was nuts. And even from the start of this year, this is what makes me smile. The headline the other day, gold, biggest crash in 1970. Well, hang on. In 1 month, we were up 29%. We are still, as of today, up 14, 15% in a month. I've been in gold on and off for the last 30 years, and you go through periods of time and just showing you where it's not a great investment. The reason silver's done so well is because of the shortage. And so last year, silver plus versus the dollar was up 180% and similar amounts against other currencies as well as. So the whole point of this is my decision to keep buying in the last few days is more of a mid to longer term view. I have been convinced for the last 5 years that we were going to see a crash in the American stock market. It's not happened yet. I still managed to make a lot of money in the last few years and by being in hedged things with gold. And I've shown you before, I've shown you my portfolio. I need to really keep this for my investing group now. But one of the ones today that I have bought, well, I bought yesterday some more, was AG. All the mining stocks today are gapping up because gold's gone up and the market's shut. Then they are gapping up. So they're going to be up at least 10%. This is the pre-market open price is 22 and now it's at 2040, and we were buying this yesterday, and I always aim to make at least 25% if I'm going to buy something. But even yesterday, this was the level I would have preferred, but yesterday we could still make 30% to where it was, guys, 5 days ago. So for me, this is all about longevity. This is all about the fact that your currency is being depreciated. And the fact that they say that the dollar has halved in the last 25 years, if you go on the true rate of inflation, you will know it is significantly worse. Now, this is another interesting one. This is examining how you go through cycles when gold is in the ascendancy. And again, this is what we've managed to do really well the last 5 years. I said to you after I got out, took profit from crypto in 2021 to put money into gold because it was a hedge against inflation and a hedge against a crash. So the point is, if you get in at the right time, if you got in here, it wasn't great. You got in here, it was great. Got in here, wasn't great. Here it was. So if you learn to use your skill as a trader and combine it with the mindset of longer term, you can make significant, massive gains. And the gains that we've made in the last 5 years have been insane, but we caught the market at the right time. Here's another graph. This is the one showing you overlay of gold against the S&P. This came out a few days ago. Remember, I spoke before about the BRICS countries. Can anybody remember which countries are involved in the BRICS countries while I grab a quick sip of my tea? Anybody? Come on. What the Brit? Thank you, Sonny, Devon. Brazil, India, China, Russia. I could have done it in order. Brazil, Russia, BRICS, BRIC. Brazil, Russia, India, China, South Africa, Saudi Arabia, and now there's yeah, Devon says that UAE's in as well. There's loads of them in now, and there's roughly around 50% of the world's population are now in a association which is trying to move away from the dollar. And as I've explained before, as Putin explained recently to the members of the BRICS countries, and I am not defending Putin at all, but if you have to go through the dollar system, look what they've done to us. And the Americans have weaponized the dollar over the years. And we're now seeing currency collapse in Iran. And when you see a currency collapse, that usually precedes the collapse of the regime or the republic. So Xi is now outwardly talking about building a strong currency to be widely used in international trade. Well, Russia and China have been dealing oil for the last 10 years in their own currencies. Saudi Arabia did a deal recently with China to buy and swap in their own currencies. But the point I would make with this is even though the dollar is in a precarious state vis-a-vis the amount of debt they've got and the fact that the Chinese and the Japanese are not buying that debt anymore, which then leads to why I believe crypto is useful, as I say, because for every stable coin in existence, they have to buy an American dollar, or the Fed will start QE again. If the Federal Reserve start QE, and they have done it slightly since December under another name, but if they start printing money to buy their own debt again, that will pump more money into the economy, which could mean that stocks and crypto will go up. So all of these things you want to be watching in the background. But for me, if I was going to hold Chinese yuan, I'm not holding something that's so manipulated. But if something could be proven to be backed by gold, then that would create a completely different scenario. So all of these things are drip, drip, drip of things going on in the background that start to build a picture. However, we all could be completely wrong, and everything marches on for the next 50 years with the dollar being king. But just to be mindful and be aware, particularly with the value of gold vis-a-vis all the major currencies, the depreciation that goes on. The countries have inflation deliberately, partly to erode what you've got, but also to persuade people to spend money. If you think things are going to start going up in the shops, then you will start to spend more money, which means that GDP goes up. Nowadays, the GDP of all the main countries is so poor that the debt is so high versus the GDP, that figure is probably never going to get met again. So just be mindful of what's going on. And as ever, I say, join the dots. But if the Chinese are going to start pushing now, then that's going to make it interesting. This is an interesting website well, this is for the UK. I think there's an international one for this as well. Newsnow.co.uk. You have it for all different things. I use it for crypto. So it's very good at keeping up to date with what's going on in crypto world and things that are going on in crypto world. There was a meeting at the White House yesterday trying to get the bill through the Senate because now even Coinbase objected the other day, and I really can't work out why. The banks are pushing back against this. The banks could lose, I think I read something the other day, it was 50 billion or 500 billion. I don't know what period of time they're talking. If you're not familiar with crypto, if you hold crypto, you gain interest on your crypto, not with Bitcoin at the moment. But basically, you do what's called stake the crypto. And so at the moment, I can't remember, but I think Ethereum's only about 4%. Let's have a look. Top staking crypto. So some of these are the weird and wonderfuls. We really want to be the bigger ones. But Cosmo, Atom, if you hold Cosmos, Atom, which is one of the bigger ones, they're paying between 15 and 21% APY. Polkadot, 11.5 to 13%. Sol, 5.5 to 7.8, and Ethereum, 2.9 to 4.5. And the reason the difference is depending which broker you go to. The banks are extremely concerned because that market for them of people depositing money in a bank where they pay you 2% and they may not let you pull your money out. I don't know if Lynn's with us today. I have a new client, Lynn, the other week, but her bank wouldn't allow her to pay me. And this was the irony because I wasn't on Instagram and Facebook and I didn't have much of a following on there. I looked like a scammer. And it was like, well, all the scammers are on Instagram, Facebook, and YouTube anyway. But anyway, they wouldn't let her pay me. And they then froze her bank account and wouldn't let her pay anybody. And if you go on YouTube and you have a look, there's lots of stories with people in America and the UK and Europe have gone into their bank asking for cash and they won't give them it until they tell them what it's for. And one of the classic explanations you can give, you might want to consider, is say, well, it's for alcohol and prostitutes, and just watch the look on the face of the bank teller. But the control that they are putting on all of us, so they borrow your money and give you 2%. They then invest it in things like stocks and gold and things that we're doing, and you're supposed to be grateful for your 2%. Well, if you're in crypto and it's stabilized, the crucial thing, then you wouldn't need the banks anymore. In Europe and in the UK, they are pushing for a central bank digital currency. Well, if everything runs through the main central bank, again, that is going to weaken the banks. So the banking industry at the moment are lobbying very hard to stop the crypto bill going through in its current state. I'll post some of these articles in the video. Michael Saylor, I mentioned the other day, I have had a sneaking feeling for some time that since the big boys came in, well, I know for a fact that they can manipulate markets. And what I explained before was in 2020, when we first got into crypto, it was you and me that were in predominantly. The big funds were not allowed to get in. And what I explained is when they came in, it would bring in a load of money, which should shove the price of crypto up, which it did. But on the other hand, it means they can start to rig it like they rig all the other markets. And so they can start to short, or they can be long and short within an ETF. They can start talking on the news and do all the usual things that they do to scare people and scare retail. And I had a sneaking feeling that they were deliberately pushing Bitcoin down to 76,000 because that is the liquidation point for MicroStrategy. Anyway, he went out yesterday and bought another. Ooh, Bitcoin, where's it gone? Added another 75 million in the last week. And this is Strategy's website, which I've shown you before. So they have borrowed heavily from investors to buy Bitcoin. They're the biggest holder of Bitcoin in the world. They now own 713,502 at an average cost of 76,000. So the theory was that were the big boys deliberately pushing this down to give MicroStrategy pain? Well, MicroStrategy have done it again. Pre-Christmas, this same scenario was going on, and at that time, MicroStrategy went out and bought $920 million worth of stuff. Now, to me, I do keep buying crypto stocks, and I've explained this before. I bought some Ethereum last week. I don't think I bought any Bitcoin recently, but I have been buying the Bitcoin stocks. We're at a massive, major area technically of previous support and resistance. But the point is, if this gets back up to its all-time high, that's 63%. If you were to be in, and MicroStrategy is not necessarily the best one at the moment for this, but MicroStrategy to get back to where the high was with Bitcoin would be 215%. And remember, that's what I have done with the gold market using gold miners as well as physical. Other things I bought in the last few days, I have bought some palladium stocks and platinum. Interesting fact on palladium, apparently the total amount in the world would fill the average lounge in a house. It was discovered by an English scientist in the early 1800s, and it's the derivative or similar to platinum, but it has a different viscosity melting point, I think is the significance. Um, and I also started to get some exposure to copper, but not in futures. I bought some copper stocks yesterday. So just be mindful of what's going on as ever. In terms of the US, the focus has gone away from crypto in the last few months, but Trump has said that he wants this sorting by the end of this month. So basically, knock some heads together and let's get on with it. And if they do, the Trump sons have got a fortune tied up in this. So, and as Eric Trump said before Christmas, we wouldn't be in it if we didn't think it was going to go nuts. Then, to me, all the signs and the other things that are going on in the background, there's new ETFs coming along, the banks, now JP Morgan and BlackRock particularly, are looking to tokenize stocks. And I did find a graph for this the other day. Real world, here we go. This is a good chart. I can't remember who I've seen this from. Oh, this is Business with Brian. This guy's very good. You can get free on YouTube. Does very good analysis, mainly on the more mainstream stocks. And he's a big holder of Amazon because he used to work for them. But very, very good analysis that he does. The significance with tokenizing stocks is for the intermediaries, the brokers, they have to. What happens is, those of us who have been in stocks for a long time will remember your settlement was always T1, T2, T3. And basically, that meant the broker would buy the stocks on your behalf, and then you would need to make sure the money was there within 2 days to be able to pay for the stocks. And that still goes on in a more convoluted way these days. But what it means is that the big boys are having to hold billions in cash that's just sat there not doing a right lot. The other thing that it's doing is that the back office for it is considerable to balance all this every day. So the amount of money that they can save will be massive. So they're pushing for it. But what it would mean is that instead of getting a stock certificate or whatever it is your current way that you get it, you will get a token. You would be able to buy stocks all day and night. And I was talking to an Aussie client this morning who's in Philippines at the moment. He's having to stay up till 10 o'clock for the market open. And Craig, one of the Craigs was saying the other day, he's having to stay up, I think, till 2 or 3 in the morning for the market open. You don't want to put forward orders in for stocks, especially at the moment, because the gaps at the moment can be significant. So it would mean it would be instant settlement. They get rid of a load of back office and save a fortune and don't have to have billions sat there doing nothing. And all of this will be done on the blockchain. And the way it's looking at the moment, it will be built on Ethereum. So Ethereum is one of my, well, it's my second biggest holding after Bitcoin. So again, if you are thinking of getting involved in crypto in any way, shape, or form, you can either buy the tokens or you can buy stocks. Any questions? Dan, I haven't time to do it now. Ashley's got his stuff to do as well. There are videos actually about it somewhere. We'll have to dig them out. I've done it lots of times. If you go back into my Forex blog and scroll back through some of the old posts. I thought that we'd copied one into the education area, but there's more than a few examples of exactly how I do my weekly analysis and the process. And I think are you the Dan that starts working with me next week, or is that a different Dan? How long have you been doing the all right. Well, quickly, I can talk about this. So, talking about market open on Sunday night. On a Sunday night, I sit and wait for the market to open. But what happens in crypto, sorry, in Forex world, you have different brokers open at different times, which is why some of the EMAs are in different places. And so, if the first lot of brokers open at 10 p.m., you get an influx of liquidity and the spreads are wide. You don't put forward orders in on Forex either, particularly not on the exotics or some of the cross pairs, because the spread can be, I've seen the spread on the pound Aussie, 80 pips. So if you're going to trade it in the first hour, the spreads go wild for 10 minutes, then it tends to calm down. So if you've decided on a big level and you're going to place a trade, I can place it then and walk away. I tend to wait until the second lot of brokers come in at the next hour. And again, the spread's wide and it goes a little bit wide and then it calms down again. And it's very similar if you're trading stocks, especially at the moment. The market will open up or down, and then it'll be noisy for 10, 20 minutes, and then it all calms down. For forward orders, no, I don't. For an A grade, I place the trade there and then. The whole point of my analysis on the weekend, I am trying to find A grades. And with an A grade, unless there's news coming out that could destroy it in the next 36 hours, I just place the trades and walk away. So that's the quick answer for that one. Uh, Grant says, would you buy Bitcoin stocks to trade or also only to hold? I would not trade crypto stocks with leverage. I would not touch anything to do with crypto tokens with leverage. You will get destroyed all the time, Grant. I don't trade it because for me in Portugal, there's no tax on crypto in Portugal if you hold it for more than a year. So for me, the fact that crypto's been down for the last 6 months is offset by the fact that my gold and silver's gone through the roof, and therefore my portfolio at the end of the year was still up. So you balancing it that way. But no, I would not trade crypto. And I wouldn't, if I was in a jurisdiction where I'm going to have to pay 28% tax all the time, every time you close a position, I wouldn't be in a rush. The only thing I do, if the price of a crypto doubles, I am starting to take my stake out. If it's one of the crazy ones, I had one last year, Pengu or something silly. It went up 300%, but at 100%, I took the stake out. So now it's risk free. When it goes up 200%, then I take some profit out. When it up 300%, I take some more out. Um, I do trade the S&P. I don't trade per se really when it comes to crypto or stocks, Grant. I am, I am investing. Um, Different, Dan. Sorry, Dan. We'll try to dig it out, Dan, anyway, because it does need to go in my M2 section. Righty ho. I said to Ashley I would be half an hour. I've done it in 28 minutes, so that was all good. And hi, Farah. And who else snuck in late? Julian in the UK. You're always in the naughty corner, you two. Mark, another Mark. He's in later. Marek and Nick. And who else do we got? Okay. So, anybody else has a question, stick them in the box for Ashley, and he's now going to go through his stuff. You'll notice that Pierre is a lot more active. He's back off the farm, he's getting back in the groove, and he's going to see if he's got some time. He may well be able to have some time for some private sessions towards the end of the month if anybody wants to learn how to master his earth and sky. And what Pierre's doing is, same as Ashley, is that they all learned the big picture thing with me, but they've all then devised their own strategies. So with Ashley and myself, we still start with M2. We still look at the big picture. Pierre does to a lesser degree, but if you start with the big picture, it enables you to go down to any different level. And then what Pierre's doing is he is also looking at some of the indices. So he's going to be a lot more active in the forum. And I say he may well be available for some private coaching. He just needs to work out his time schedule. Yes, I will put the links in the blog post, Jamie. Correct. Righty ho, over to you, Ashley.